Hello, y'all. This is your main man, Reg. Welcome to this edition of Give Yourself Enough Credit. We got this coffee going. It's awesome. And this is going to be awesome too. Hey, this segment is going to be talking about fair lending, and it provides information that's helpful to us as a consumer. A reputable lender, they won't mind you having this information, especially if they're conducting their business above board and taking care of their customers. So there's a couple things I want to share, and I want to make sure that you have this information. And there are many people who may not. I want to make sure you have it anyway. The first thing I want to share, there are two things that are designed to protect customers in terms of housing and lending. The first one is the Fair Housing Act. And if you hear the acronym FHA, that is what it's referring to. This act prohibits discrimination in residential real estate related transactions based on race, color, national origin, sex, religion, familial status, and handicap. The second one is designed to protect customers is the Equal Credit Opportunity Act, otherwise known as ECOA. This act prohibits discrimination in credit transactions based on race or color, national origin, religion, sex, gender. Now, the Consumer Financial Protection Bureau just gave a more updated definition of this. This also includes sexual orientation and gender identity. So it's a more broad definition. It's a more broad definition based on today's times and today's dynamics. Marital status, age, applicants' receipts of income from a public assistance program, and an applicant's exercise of good faith and any right under the Consumer Credit Protection Act. These acts are designed to prevent and identify unfair and deceptive practices like disparate impact, disparate treatment, and predatory lending. This is an example of disparate impact. A lender's policies, even when evenly applied to all applicants, may still have negative effects on certain applicants. Here's an example for you. A lender may have a policy of not making single-family homes to personnel for less than $50,000 a year. This policy might exclude a high number of applicants who have lower income levels or lower home values than the rest of the group who are applying for the same loan. This uneven effect of the policy is called disparate impact. This practice, according to the Fair Housing Act, is not allowed because the policy may be applied based on a dollar figure, but it greatly reduces the chance of certain groups from obtaining the loan with equal consideration. Here's an example of disparate treatment. If a lender offers a credit card with a limit of $900 for applicants ages 21 to 30, and $1,800 for applicants for over the age of 30. This practice isn't necessarily allowed either because under the Equal Credit Opportunity Act, it is discrimination on the basis of age. Now, here's some examples of predatory lending. First one is collateral or equity stripping. This is the practice that relies on the liquidation of the borrower's home or other collateral rather than the borrower's ability to repay. Another one is inadequate disclosure, the practice of failing to explain the true cost or risk of a loan transaction. Risky loan terms and structures. This is the practice of making loans with terms and structures that make it more difficult or close to impossible for borrowers to reduce their indebtedness. Padding or packing. This is the practice of charging customers unearned, concealed, or unwarranted fees. Another one is flipping. This is the practice of encouraging customers to frequently refinance mortgage loans solely for the purpose of earning loan-related fees. And the last one is single premium credit insurance. This is the requirement to obtain life, disability, or unemployment insurance for which the consumer does not receive a net tangible benefit. I know that was a lot to explain, but this is important to us, and I'm going to explain to you how this affects credit. Many people have applied for loan or credit, may not have been knowingly subjected to unfair or deceptive practices that violate these acts. Many people have not been given equal consideration for a loan or credit and may have been unknowingly subjected to unfair, deceptive practices that violates these acts. Many have been or involved in these type of transactions that may not be aware of something that could be an unfair or deceptive practice by a lender. You've heard the saying, what you don't know won't hurt you. And in many cases, this is true. But what we don't know could unknowingly cost us thousands of dollars more than necessary. Sometimes these are the reasons why hardworking people are easily get put in situations that are damn near impossible to get out of. And a lot of times, these type of practices, it puts the squeeze on people to the point they have no choice other than to file bankruptcy or to be foreclosed on, or a loan being forced to go into default because they do not have the money to pay. All of what I mentioned, when those things happen, they lower a credit score. And when a credit score is lowered through these means, it's tougher for some than it is for others to rebuild after something like this. But I also want you to know it's not impossible to turn things like this around. Many are turning this around every day. I know I help people and want others to have more knowledge in financial literacy. Knowledge is power. Cash is good. In most places, of course. But good to excellent credit opens doors and gives you more buying power and better control over your future. If you want to know more about the FHA and the ECOA, the Office of the Comptroller of the Currency is the proponent for this information. Or if you want to look it up, it's www.occ.gov. This is the office that talks about this and explains how and explains these protections for the consumer. Don't forget to like, subscribe, and this will let me know that these need to continue to be forthcoming. This is your main man, Reg. I'm wishing you all a great day, and I want you to give yourself enough credit. I love you guys. Take care.